Hello everyone, happy holidays. This is Matthew Frailey with BreakpointTrades.com. This is an intra-week technical analysis review of the markets. It is currently Wednesday, December 11th, 2024. And again, this is my comprehensive review of the market midweek. Once again, my name is Matthew Frailey, founded Breakpoint Trades 21 years ago in 2003 to provide advanced technical analysis, market commentary, trade ideas, and advanced mechanical trading systems, which are my passion. Our 21 SPY and ES mean reversion systems, we've got a great trade going on there. And of course, our amazing KISS systems. Quite a few of you recently signed up to that. You can see some of these awesome gains, even in the non-high performance section, just the standard BPT basket. Tesla systems up 65.9%, went long on October 24th. AT&T's up almost 38%. IBIT, Bido, there's a couple of Bitcoin ETFs, et cetera, et cetera. Really nice gains here. And of course, our high performance KISS section. And just look at these gains, guys. Awesome sauce. Again, not back tested. These are live system trades that our subscribers have been in. Okay, let's get started back with this video. This is our backend recorder for our website subscription service. And if you're just on YouTube, you should consider subscribing to us. Anyway, I'm going to get this recording started right now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. This is the Wednesday, December 11th newsletter. Again, happy holidays everyone. Christmas is only, 14 days away now? This newsletter is divided into 6 major sections, same theme as we always keep. First off, talk about our opening discussion on the market. Then I go into some of our systems, admin stuff. We talk about one of our open breakout system trades from the SPY systems. That continues to raise its stop seemingly every day. That's a winning trade. Stops are above entry, so that trade is profitable no matter what happens. Then I'll move back to the general market analysis, look at the major indexes in a top-down approach, review a few market indicators, look at a few sectors, look at the dollar, US dollar, Bitcoin, crypto, commodities, precious metals, mining stocks, and we'll follow up with some trade ideas. I did add a few new trade ideas as well. Like I said, we are in the holiday mode on the market. Markets had a nice day today. As you know, on the weekend, we were looking for some sort of at least a minor fourth wave pullback this week, and that played out. We got that on Monday and Tuesday. So the market had a nice healthy pullback there. And today, big rally. So likely that fourth wave is in. Now, it's not completely confirmed on the S&P because the S&P hasn't made a new high yet. But the Qs, Nasdaq did. And remember, big cap tech is what has led this week. That's what we talked about. Apple, Amazon, Google, Meta, Tesla, Netflix, all these making new all-time highs. That's what's been leading the market. Obviously, the market had a positive reaction to the CPI data today. Tomorrow is the PPI data. That's Producer Inflation Index. So we'll see how that comes in. And let's go ahead and look at the charts. So first image below, this is a follow-up educational image. So this here is a half-day chart of the triple Qs. These are some of our indicators like our moving average ribbon with the BPTMA Deluxe and our cycle indicator. There's cycle support, cycle resistance. And as I've been commenting, and I talked about this first a couple weeks ago, whenever price perfectly ping-pongs between these support and resistance cycles, especially 4 or 5 times, that's something that really stands out to me, because then when price finally closes through one of the cycles like it did here, it closed through the resistance cycle instead of reversing off of it like it did these other times, that signals a breakout and a wave 3 of some sort. Well, that is played out. And you can see my graphic here on the right where you have a consolidation wave 2, and you can see A, B, C, D, E. Typically, in that type of consolidation, price will perfectly ping pong between the cycle. The cycle is indicator, sort of like an Elliott wave type thing. And then when you finally break through a resistance cycle, that signals a wave 3 trending move. And anyway, that played out. I talked about this a couple weeks ago when price first took out that resistance. So I'm just doing a follow-up on that. Next, image number 3. So we still have the open SPY breakout system. Okay, this trade has been long. It's been in a first and second entry. You see a closeout here. It didn't scale, it just scaled out. It didn't close out the whole position. It closed out a half position here for nice profits, but it is still long half the position. It has been in this trade now, first entry for 34 days. That's a fib number, by the way. And the second entry, 26 days. So if you're new to Breakpoint trades, first entries, we use the 1x ETF SPY. For second entries, we use the 2x ETF SSO. If there happens to be a third entry, then it would be use UPRO. Okay, but these trades here, you can see this trailing stops are nicely well above that entry. 591 was the entry for the first entry. Stop is now 598, and SSO 96.80. Entry was 92.93. So nice gains here on these. You can see these have been the trades sent out for this year. These are live trades for the website. Again, the mean reversion systems have been not as active this year just because we've been a really good, strong year for the market. Mean reversion systems typically are quieter in strong market uptrends, and they're much more active during volatile markets like bear markets. Like 2022 was a bear market. SPY systems, I think, did around 90 trades that year. So just to give you an example. But on years like this, when the mean reversion systems are more quiet, that's where our trend following KISS systems come in. But even if you just did these mean reversions, okay, obviously you would have paid for the website subscription many, many, many times over. Congrats for those of you who are still in this trade. Next, image number 4. So again, our KISS systems have been killing it. Here's the high performance. Even the standard has been doing very well, as I showed in the opening video. But you can see these trades. Tesla obviously been crazy. It's new all-time highs. Be crazy to see what Elon Musk's net worth is now with Tesla making a new high. But you can see these two trades, 78-minute, 138-minute, are up 70 to 67% respectively. GBTC is up almost 62%. I mean, hella gains here, and these are live trades. So subscribers to these KISS systems, hope you've been following these trades and been up substantially. Okay. And that does it for that. Let's go ahead and move back to the general market newsletter. So item number 5 shows the index sector table, what transpired today and this week. You can see nice gains for the indexes. Again, what's led this week is the big cap tech. Nasdaq up 1.8% today, and the Dow was down. Now for the week, we have weakness in the Dow, S&P, and Russell, with the big cap tech leading here. As far as the 21 market sectors here, today I'd say roughly 50-50 were up. So despite today being a strong up today, it wasn't as broad-based a rally as you think. Like I said, it's been concentrated in these tech areas: technology, semiconductors, communication services, XLK, stuff like that. Okay. Otherwise, you got a lot of weakness in other areas, and you can see for the week, almost all red on the 21 sectors. Again, what's up this week? Communication sector, communication services. That's your big cap tech primarily. But otherwise, pretty good losses here across the board for the week. Currency-wise, US dollar up 0.3% today, up 0.75% for the week. Cryptocurrencies, Bitcoin came rolling back, up 5.2%. It's now back over 100,000, 101.6 thousand. Commodities, mostly to the upside here. Copper, agriculture, corn, slightly down. Coffee finally taking on the chin. Coffee's made a new all-time high, but finally pulling back there. But everything else is up. Natural gas up 5.4%. Crude oil up 2.7%. The index, DBC, up 1.2%. And look at the gains for the week here. Pretty strong gains for the week. Precious metals rallied once again today. GDX, the mining stocks, outperforming. Okay. So pretty nice bounce back in the precious metals. And as far as the bond market, we saw a tick up in the 10-year, 30-year Treasury yields. And finally, item number 6 is the economic news calendar. Today we had the CPI, which the market reacted well to. Tomorrow we have besides initial jobless claims, the PPI, that's producer price index. We'll see how the market reacts to that, and then we have natural gas inventories after that. Okay, let's go and look at the charts here. First off, chart number 7. Here's Google, one of the big cap tech. Look at this gain, up 5.5% today. Massive gain here. Now, you had an opportunity to buy Google yesterday on the breakout of this coil-like pattern. What initiated that was news on their quantum computer, new advance there that looks very, very promising. And so I actually bought Google yesterday after this breakout, and a huge follow through today. I mean, look at that volume coming into it. They certainly need something else because, as you know, DOJ has been on them and about their search business and all this stuff. So definitely, they're big enough to possibly get this, other business in these other areas. But hell of a gain there. Next, number 8, here's Amazon. It's just been steady Eddie, making new highs all the time. You can see you had a little resistance back here in this trend line, and you had another little horizontal resistance here, and it's just been up and away since. It is getting a bit extended here. There's just a slight RSI divergence at the moment. Chart number 9, here's Microsoft. I mean, this has also done well, just continues to move higher. Chart number 10, here's Meta. Remember, this broke out last week from this expanded wedge pattern, continues making new highs. Chart number 11, here's Tesla. And Tesla, like I said, new all-time highs. Hell of a move from this pattern. By the way, the KISS systems went back long here in mid-October. So they've caught this whole run, which is awesome. But boy, this thing just continues going. And here is the weekly chart. Remember, we had this big 2-year coil. This was the bullish labeling, A, B, C, D, E, with the E being a higher low inside the coil. That's textbook. Into a demand zone, and boy, oh boy, new all-time highs. Elon, his pocketbooks have got to be looking good. And honestly, guys, SpaceX, I think that's the bigger thing. We don't even really know how much that's worth. I don't know how much that gets added to his net worth, but boy. Anyway, crazy stuff. Hella move. And here's Nvidia. Now, Nvidia, as you know, that bounce did stall at that retest of the broken channel line, as I warned. Pulled back. So far, it's trying to find support once again in this demand zone. So we'll see. Below that, you have an uptrend line here and a larger demand zone. And finally, chart number 14, here's AVGO. This is Broadcom. This is another big cap tech stock. Up today. It's got a nice looking pattern here, resistance, but this does report earnings tomorrow, December 12th, after the close. So we'll see how it reacts to that. Okay, let's go ahead and move on to the major indexes. Chart number 15, here's the 5 key major indexes. Again, you can see the Dow has been really weak here. In fact, you got 5 down days in a row now. The S&P bouncing back a little bit after the last two pullback days. Hasn't taken out its high yet. It's pretty close. Nasdaq obviously making new all-time highs here. And the Russell is still stuck. We'll see if the Russell can finally start to maybe rally again for the end of the year. The small caps tend to lead late in the year, but so far they have not. Next, chart 16, here's the Dow. Don't often look at the Dow. It's 30 stocks, but otherwise you can see the weakness here over the last 5 trading days. Here, it's on basically an uptrend channel, but it's been weaker lately. Next, moving on to the S&P 500. Let's start with the KISS system. So here's the S&P 500 KISS high performance system. Again, smart trailing stop still around 59.50. We had a pullback the last couple days, Monday and Tuesday. Remember, I warned about that on the weekend. We were looking for a fourth wave pullback of some sort, which we got. Little bounce back today. Haven't taken out the highs, but likely that fourth wave was put in. Chart 18, here's the 4 time frames. You can see on the half-day chart, we bounced off the ATR, which became support. All right. Next. Moving to the standard charts, chart number 19, here's the weekly view of the S&P, which is, like I said, down 0.1% for the week. It's long term, it's in this uptrend channel. Here's a bigger demand zone below. Nothing new to say really about the big trend here. Next, chart 20, here's another weekly chart. Again, I covered all these ad nauseum last time and, of course, on the weekend. But we are keeping an eye on this because we are working on some sort of wave 5 here, guys. I mean, there's multiple ways. This could be a wave 5 of 3. It could be a 5 of 5, whatever. But even under this scenario, this 5 of 3, eventually we're going to get a pretty decent, healthy pullback as a major wave 4 like this. And this could be to the 23 to 38% fib. You know, this could be 500 to 900 points. I don't expect it to occur right now, before Christmas, obviously, but maybe this is something we'll see in the new year. Okay, so we got to keep that in the back of your mind, guys. Things are quite stretched here. Next, chart 21. Here's the daily S&P. Again, talked about that. Looking for that wave 4 pullback in the weekend. You can see we did get a pullback the last couple days. Maybe that just completed that little wave 4 and go up in a 5 of 3, perhaps. Next, chart 22. Here's a half-day chart showing the same thing, wave 3, 4. Here you can draw a pretty obvious wedge ending diagonal. So definitely something to watch. A new high here. This could set up a nice little high, so just be aware of that, guys. Chart 23, here's the other daily chart, the more bullish nested 1, 2, 1, 2. Still valid as well. Next, chart 24, here's the 60-minute view of the S&P. Remember I talked about this demand zone? Well, we pulled right back to the demand zone. And where did we find support? Right at the demand zone and in rally. Now, again, we haven't taken out that, 69, let's call it 6,100 high. So this could still theoretically form a lower high, wave B, and come down again with wave 4 still in place. All right. So we need to see what happens tomorrow, but that is a pretty good retracement, and the Qs did make a new high. Next, chart 25, here's that 60-minute chart I discussed last time. Remember I talked about this kind of ending diagonal pattern and this wave 4? Well, look, it's basically played out. Yes, it didn't make it down to the bottom of this trend line, but whatever. I mean, this probably completed the wave 4. Again, you can't say 100% sure just because we haven't taken out the high of the 3. But, odds favor that for now unless we get a big reversal sell-off tomorrow. And chart 26, here's a 15-minute view. Again, you can see, I don't have any trend lines on here, but essentially we had a breakaway gap today. All right, guys, that does it for the S&P. Moving on to the Nasdaq. Here's the Nasdaq daily KISS system. By the way, we got a new smart trailing stop. Stop moves from 503.30 to 509. So nice little jump there. Kind of following the ATR up. Again, this made new all-time highs. Big cap tech has been the strongest. Chart 28, here's the 4 time frames. So again, remember I've been talking about these cycles. I just talked about the half-day chart with the resistance cycle where we closed above that a couple weeks ago, and that led to the big rally up. Okay. Next, chart 29, here's the weekly view of the Qs. Like I said, we're working on this wave 5 on the weekly. We've been in an uptrend channel here since basically late 2022. We are working on a big MACD divergence, which again, maybe, once this completes, we're likely to see a pretty decent sell-off, likely sometime in the new year. Okay. Just showing you that. I'm not, this is not something you go out and react tomorrow, but it's just something, just keep an eye on the bigger picture. Next, chart 30, here's the daily chart showing this uptrend channel. One target could be the upper channel line, perhaps. Okay. Next, chart 31, here's the 2-hour chart. Talked about looking for a wave 4 pullback on the weekend, which we got, and then we made a new high today. Now, this new high is setting up a little MACD divergence here. You see that? So be aware of that. And chart 32, here's 60-minute chart. You can kind of see a wave 5 that we're working on here. Wave 1, 2, 3, 4, 5. So anytime I start seeing 5 waves, I get a little more cautious. Again, wave 5 can extend, right? But I start to get a little more cautious. It's not as low risk, okay? And chart 33, here's a 15-minute chart. One thing, we never did fill that open gap below. right? Sometime on the next big sell-off, that'll be a magnet, but we just touched the top of that and then rallied up. And finally, chart 33, here's IWM small caps. They're still lagging behind here. They're up today, but here I added a little channel to monitor. So they're still in this little bitty channel. We'll see if they can start to rally here or not. I'd like to see it at least hold this 20-day moving average. And chart 35, here's a zoomed in view of that via a 2-hour chart, this channel. Again, I really need to see IWM to break out of this channel. And for now, it's just trending down inside of it. All right, so that does it for the major indexes. Check on futures here. ES futures are down about 8.5 points at the moment, so slightly down this evening. Next, chart 36, here's the VIX. So the VIX, not much, little down day today, so it's still inside its Bollinger Bands. Chart 37, here's the 60-minute chart of the VIX. There was a gap back here which we filled, but now we have an open gap. Well, actually, we got a couple gaps here, guys. So we have an open gap here to the downside. You see that unfilled? And we actually have an open gap today on the gap down. So remember, these gaps love to be filled, all right? So I'll make sure to shade this, but you got two gaps here. So price could go either way, fill in the gap to the upside or the downside here. Obviously, if it filled the gap to the upside here, I'd like to see a pullback. If it fills this gap down here, we should see further rally. Next, chart 38, here's the VIX, but with the VIX VVIX ratio. That's the volatility of the VIX. So we have our VIX Bollinger Band system when you close outside the Bollinger Bands and back inside, stuff like that. But this VIX VVIX ratio, you could use the same thing. This actually gave a sell signal, if you recall, last Friday, and that played out the last couple days. Okay, as you can see here. We also had a sell signal back in early November, which played out. That said, the VIX ratio closed back below the Bollinger Bands again today. So theoretically, that's given another sell signal. So just take a note of that. Next, chart 39. Here's, talked about this on the weekend as well. That's the S&P 500 versus the Nifty 500 index. That's the Indian stock market. And again, this is a weekly chart going back to 2016. Again, you can see the two move together, right? But when there's divergences, like the Nifty 500 here making a lower high back in late 2021, but S&P making a higher high, that then we led to the bear market. Well, right now we got a big divergence here. Nifty 500 still has a lower high versus a higher high in the S&P. So unless this takes a new high, this could be spelling for a pretty nice correction early next year. Okay, so something to watch. Next, moving to the bond market, chart 40. Here's the 10-year Treasury yield. Again, bouncing logically right off that demand zone that I'd marked on the weekend. Chart 41. Here's the 2-hour view of the 10-year. Remember on the weekend I talked about 5 waves. Whenever I see 5 waves, I start looking for a reversal, and we did. So far, we've had a nice bounce up. But I am looking for this to form a lower high somewhere around these fibs. Next, chart 42, TLT 20-year bonds. Nice sell-off today, down about 1%. You can see the last rally stalled around the 50% fib. And chart 43, here's high-yield corporate, still holding in there very well. Market also tends to follow high-yield corporate very well, so you always want to keep an eye on that. Next, chart 44, here's XLK technology. And again, we have this big wedge that we've drawn this. Last week, price stalled at the top of the wedge, but otherwise it's still trading within the wedge. So you got to keep an eye on this, guys, because this is still potentially bearish pattern setting up unless price just blows this out. So we're still trading in the confines of this wedge. Chart 45, semiconductors, little bounce back today, but it's still stuck in a very choppy range here. You know, it did find support around the demand zone recently, but the bulls got to get going if they want this to go up. They need to clear out a lot of this resistance. Next, chart 46, here's the banks. Remember, the banks and financials had a hell of a run from the fall time frame. Got quite extended, pulling back here. There's a little support here I monitor. Breaking this, it's likely to test the 50-day here in red. You can see the reason I had pretty obvious MACD divergence, RSI divergence. Chart 47, here's financials, same deal. Get this little support, shelf support to monitor. If that's lost, look for a test of the 50-day. Next, chart 48, IYT, transports. Remember, this sector was quite strong, but it's been very weak the last couple weeks. Lost that trend line, and today closing slightly below that 50-day moving average. Chart 49, consumer staples. They rallied off that big support, stalled at this little resistance, down today. Chart 50, materials. They've been weakening, as you know. I talked about this. So losing that uptrend line, losing the 200-day moving average as well. Not looking good. Chart 51, here's XLI Industrials. They've pulled all the way back to this channel, 50-day moving average. Bulls really got to defend it here to right at this critical support. And finally, chart 52, here's XLE Energy. Remember, pointed out XLE Energy was at the top of the range. That was a good logical area to sell off, which it did. It filled this gap, that open gap. It's now no longer an open gap. But we're right around the 200-day moving average here. Got a doji. This now could be an area to watch for a potential long, guys. And let me show you why. So chart 53, here's the 60-minute view. You got a potential wedge forming. Again, it needs to break out of the wedge, but there is a potential wedge here with some MACD divergence. And chart 54, EEM emerging markets. They had a big pop early this week, as did the Chinese market. They've all pulled back though. It's pulled back pretty good, bouncing a little bit today, and we'll see where this ends up. Moving to commodities, chart 55. Here's DBC, the index. Nice pop today, finally clearing this downtrend channel. That's a positive. By the way, the KISS system is long this, and if you're long, you could probably put a swing stop right at that higher low at 21.85. Chart 56, here's the weekly chart, of course. Remember, it's been trading in this range for a couple years now. If it eventually breaks up out of this range, that could start a hell of a rally. And chart 57, here's the CRB to SPY ratio. Remember, that's commodities to the S&P. Okay, S&P as the denominator. Now, as you can see, commodities have been underperforming here since mid-2022, but this is an amazing looking wedge. Look at this, just textbook 5 ways, 1, 2, 3, 4, 5 with MACD divergence. That is an absolute textbook wedge, guys. So we'll see. In order for this to play out, that's likely signaling a rally coming in commodities next year, and maybe weakness in the S&P. So keep an eye on that. Next, chart 58, crude oil. So far bouncing back this week a bit, up 4.6%. Chart 59, here's the daily chart. Last time I drew this as a diamond, I took that off. So it's still overall in the big downtrend channel here. Here you got a little kind of a triangle pattern to watch. Nice update today. We'll see if we can clear that resistance. Chart 60, UNG natural gas, nice pop. We got a higher low in here now. I'm actually long a little bit of this, but now let's see what it does at this 200-day moving average. It's just been failing here multiple times. We'll see if it can finally break through that or not. Chart 61, copper. So a little slight down day today, stalling at the 200-day moving average. Chart 62, DBA, agriculture. This has had a hell of a rally after that ABC 3-wave pullback. So still in a very nice uptrend. Chart 63, Bitcoin. As you know, Bitcoin's rallied back this week. It's back over 100,000. This weekly chart was absolute textbook. We counted that pullback in July as a wave 4 into that demand zone, and boy, that was a great buying opportunity. Bitcoin has doubled since July. Think about it. Next, chart 64. Here's the daily chart. So it did bounce off that demand zone. I'd still be cautious with Bitcoin here, even though with the bounce back. Remember, we do have this divergence at the highs here, so just be aware of that. Chart 65, here's one of the tradable ETFs, IBIT. Honestly, you could probably just put a trailing stop if you're still long this, just below that 53.60 higher low. And one to keep an eye on is BITI. That's the inverse Bitcoin short. Yeah, some nice RSI MACD divergence. You can see it was down today. I added a trend line. If it breaks this trend line, notice how the 20-day moving average comes in right here. I think that could be a good buy at a pullback in Bitcoin. And Charter 67, here's Ethereum. It's been stronger than Bitcoin lately. So moving on, Charter 68, US dollar up today. And just chopping around, honestly, since that last high. It's been very strong after coming out of this falling wedge with MACD divergence. Here is the weekly chart. You can see trying to bounce off this trend line here. Moving to precious metals, Charter 70. Here's gold, up almost 38 points today. I'm still looking for a potential wave B lower high, but we'll see. It's been hecka strong. But so far we have 3 waves up only. So we'll see where this goes. Charter 71, here's the weekly chart again. Nice rebound this week, up 3.65%. Long term, guys, remember, I am expecting gold to go well over 3,000. Charter 72, here's the other chart of gold. Again, I'm still... Wave 4 could have been put in. I would feel better if this had another consolidation, though, just to give it more time. But we'll see. Eventually, I'm looking for new highs in that wave 5. And Charter 73, here's silver. Nice bounce off that support area. Testing now the 61 fib. And as you all know, the big monthly chart. Bitcoin's up, or silver's up 6% this month. I'm expecting silver to go to all-time highs eventually. And Charter 75, GDX, the miners, nice bounce back today, up 2.9%, but closing right at its 50-day moving average. Overall, the stocks have been much weaker than gold. You know, gold's not too far away from its highs again. You can see how far GDX is away. So they've been weaker. I'm expecting overall this to form a lower high. And if we look at the 2-hour time frame, here you go. Remember, I've had this labeled as an A, B, C. Well, C is starting to play out. I'm still hoping C can go up higher to one of these higher fibs. But ultimately, I'm looking for a lower high here, guys. So I am looking to sell my long here sometime on this rally. Okay, finally, let's look at our trade ideas. Charter 77, XMTR, little ascending triangle from the weekend. Yes, it popped nicely on Monday. But if you weren't able to sell, maybe you work a job, stuff like that, that's fine. Nothing was wrong with the pattern. A swing stop would simply have went under this uptrend line. If your patience was rewarded, and now it's back up nicely today. So now you can do what you want, but nice trade overall. Charter 78, CYH, another idea from the weekend. So far, it's been moving higher out of this demand zone. It is quite a depressed play, so I thought it looked like a decent long. Next, Charter 79, Lucid. So this broke out early in the week, pulled back, but if you've been an astute trader, you could have bought the back test of this previous resistance turn support. Honestly, the pattern still looks really good here. Next, Charter 80, here's TCPC. That's that dividend play. Pays about a 16.8% annual dividend. It pays quarterly. You know, hopefully a lot of you guys bought it back in this bottom of the range a couple months ago. That was a great buy. This goes ex-dividend on the 17th, so just be aware, for 44 cents. Next, Charter 81, here's Advanced Auto Parts. This broke out on Monday, but then it's pulled back. It's now retesting this previous resistance. Now we'll see if it can find support in here or not. Next, Charter 82, AFRM. Again, these long-term plays, I'd be buyer on a pullback if they pull back on light volume. Charter 83, Rocket Lab has been an absolute rocket from our entries back here in June and August and in October. It got way extended up here. Initial A, B, C. Now I don't know if wave C is done, but I was expecting at least an ABC consolidation. Here's some new setups, guys. There's not a lot of good setups showing up, so here you go. EQX. Now this is a weekly chart. Okay, it's a gold stock. Equinox Gold. Nice little ascending triangle here. Resistance at 650. Looks pretty damn good. Charter 85, Quart. Here's another one, little ascending triangle pattern. Swing stop would be just right below the uptrend line. Chart 86, CVLT. Clean horizontal resistance up here. Needs to take that out for a long. And chart 87, AISP, little low price stock. Nice base forming now. It's coiling here. One to watch. And the final puppy, SoFi. Seems like I get quite a few letters from SoFi all the time, you know, approving me for loans, whatever. Anyway, kind of has a flag pattern here, bouncing off the 200-day moving average. So we'll see if this can pop out of here. All right, guys, that'll do it. Again, appreciate all your support. Happy holidays. Take care, and see you next time.